The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Scorebox Europe. I'm Steve Sedgwick with Ian King, and these are your headlines. Oil prices, well, they're down 5%. We use the plunge word liberally, don't we? But they're down 5% as Iran reportedly says it will hold off on strikes as long as the US does the same. This as Trump advisors raise fears over munitions supplies. Calming hostilities in the Middle East helps lift equity futures on both sides of the Atlantic. This as investors brace for a huge week of corporate earnings and central bank decisions.
CXMT becomes the biggest China-listed company by total market capitalization in its blockbuster IPO, surging by more than 500% in Shanghai. Hundreds of thousands of people are displaced as wildfires tear across France and Spain. French President Emmanuel Macron is set to hold a crisis cabinet meeting today, while the Spanish Prime Minister Pedro Sánchez warns of difficult hours ahead.
Good morning to you, Ian.
Morning, Sedgwick.
There was a headline or something in our notes. We're going to find out a lot more about the earnings situation, a lot more about the market this week. And I don't think we are. I think we're going to hear a lot from companies like AstraZeneca have just reported, and we'll speak to the CFO in a couple of moments' time. I think we're going to hear a lot more from a lot of grassroots companies on how they're outperforming. I don't think we're going to get any further clarity on the key story that dominates up to half of many of these key indices, and that is AI. Yep. What we're going to hear is the following. That companies still expect that the profits are going to be enormous, that they still expect the revenues are going to be enormous. And we're going to see some signs of that in the revenue story as well. But what we're also going to get is what we got from Alphabet last week, is that spending commitments remain enormous and are potentially growing. There was a great piece in one bit of copy I was looking at. Alphabet spending, which we know last week, up to $195 to $205 billion on AI in 2026. Amazon is expected $200 billion. Meta is expected $145 billion at the top end. Microsoft somewhere in the region of $190 billion in 2026. What we don't know is when that's going to turn into meaningful revenues and profits. And I don't think we're going to get clarity on that this week.
No, we won't. I suspect what we will hear from it, don't forget, I mean, while we're all fixated on the AI stocks and the chip stocks and so forth, there's a lot of industrials making good money right now out of this build out as well. The average industrial stock in the S&P 500 is now trading on a PE of around 30 times.
And that's the problem, Ian.
These things are priced to perfection. So they've just got the margin story is going to be all important this week.
When we mentioned, I think it was you and I last time we mentioned it, that 20% now of the S&P is related to semiconductors. Yeah. But the problem is that the tentacles, as you're pointing out there, the tentacles of AI and this tech trade have gone way beyond semiconductors, have gone way beyond pure AI stocks, have gone into, as you say, the industrial base and all kinds of other stocks and sectors that were reasonably priced before. Yeah. Now, as you say, everything is priced to perfection for the AI trade as well. That means that if we do see a downtick or some concern about it or volatility in the trajectory towards profitability, I've no doubt we'll get some form of profitability, but the trajectory towards, then that's going to affect absolutely everything, and that's the point.
Yeah, well, and not least because we've just had a rotten fortnight on Wall Street with the S&P and the Nasdaq off 2 consecutive weeks.
And also, sorry, one more thing. I know
we're heading to August as well, the prime month for volatility.
I mean, hands up. All right, you lot. Come on, everyone. Let's play a game at home. You're all at home. Put you down your spoon with your ready break or whatever it is. How many of you have heard of CXMT? I'm going to hold my hands down. Come on, put your hands up if you've heard of CXMT. That's about 20 of you. Not many, is it? CXMT is another one of these massive memory chip companies out of China that has suddenly just gone up 500%. Now, they don't just go up 500% and everyone thinks, oh, that's okay. All the US chip players will be fine because the Chinese have got a massive name called, which is bigger than Tencent now, by the way. Yeah. So that's my point as well. You can't have it all, i.e. it's all about Samsung, it's all about SK Hynix, it's all about Micron, and then get a story like that.
This thing's only broken into profit this year.
I know.
It's on a PE of 1,800 times.
Yeah, I saw that. and a very large multiple to sales as well. Yeah. Ian, let's move on.
Indeed, yes. The United States and Iran have held fire for 2 straight days in order to allow more time for diplomacy. Over the weekend, the Iran Foreign Ministry said there had been some movement in talks with mediators over the Strait of Hormuz. The temporary relief comes after nearly 2 weeks of US attacks and amid concerns over depleted US munition stockpiles. Well, we showed you the oil price a little earlier on. It did come off a smidgen there. Yeah, way off the weekend highs, the levels we saw going into the weekend there. Brent crude now at 91.37 a barrel. Well, Dan joins us now. I mean, Dan, I guess the big question for everyone, on everyone's mind now, is for how long can this sort of uneasy ceasefire continue, if you call it a ceasefire?
Exactly. Ian, good morning. Well, it seems as if the duration risk is back in play for investors here. Yes, we have seen oil coming off the boil here, trending down in the order of around 5% right now after the US and Iran pause strikes. And remember, a pause in the war here after 13 consecutive nights of US strikes last week, oil down on hopes that this pause will hold. For the first time in 2 weeks, the US military holding fire here, and there have been no new strikes on Iran since Thursday. The US ambassador to the UN, Mike Wall, saying President Trump is giving the talks some space before deciding whether to resume strikes. And it's not clear what exactly has changed on the diplomatic side to prompt this pullback, but markets are rewarding it nevertheless. We're also tracking a report from Axios this morning that says President Trump's top military commander in the region, this is the CENTCOM chief, Admiral Brad Cooper, recommended stopping the campaign. 2 sources tell Axios that Cooper believes the strikes had reached the limit of what air power could achieve. His message to President Trump was, look, either return to full combat or stop the operations completely. President Trump, of course, reportedly leaning towards escalation as early as last week, but then apparently, according to Axios, changed his mind on Thursday evening. Of course, while markets are rewarding this pause between the United States and Iran, the war hasn't necessarily stopped everywhere, and that's because Yemen's Houthis struck 2 of Saudi Arabia's most important Red Sea oil facilities over the weekend, according to reports. That is in Yanbu and in Jazan. CNBC has reached out to Aramco and the government for comment, but so far Aramco has stopped short of commenting on its Red Sea operations. This is really important. Of course, Saudi Arabia has been moving oil to the west to try and get crude to the global markets via the Bab el-Mandeb, which the Houthis are now threatening. Of course, if this attack is confirmed and we have seen damage in either Yanbu or Jazan, then it would suggest that a new front has opened up in this conflict and the Houthis are now directly targeting that infrastructure. That's bad news for Saudi Arabia, bad news for Aramco, and bad news for Gulf supply onto what is already quite a strained global market as a result of these dual blockades taking place in Hormuz and the Bab el-Mandeb. At the same time as well, President Trump already warning that if the Houthis fire again, he's going to hold Iran responsible. So I would contend the signal to watch this week is going to be in Washington, D.C. Israel's Prime Minister Benjamin Netanyahu leaving for D.C. today and is expected to meet President Trump as soon as tomorrow. Any news from that meeting with Trump and any signals on the next steps for this war will be very closely watched by everyone in the region and, of course, anyone exposed to the oil markets now too.
All right, Dan, thank you very much indeed for that. We'll come back to you later, of course. AstraZeneca has reported second quarter revenue, and I don't know what the market's going to make of these numbers. I'll show you a case in point in a moment. Second quarter revenue of $15.4 billion. That's broadly in line with estimates. Now, the UK pharma giant has also backed its full year forecast and, of course, its revenue targets going forward as well. Let's go into the details now. Delighted to say Uradana Sarin, the CFO of AstraZeneca, has joined Ian and myself now. And Uradana, my point about the market and its understanding of the numbers, it was kind of comes on the back of that Wainua situation where it's a key drug. It had a problem. Obviously, it didn't do very well in its trials, the failure of its nerve drug, and raised questions. The shares fell very aggressively. You lost about $20 billion of market cap on the back of one piece of update on one drug going forward as well. And you've given us a whole update of lots of other different drugs as well this morning as well. Is the market being too cautious, do you believe, on your pipeline?
I don't know if they're being too cautious on the pipeline. I think so. going back to when we set our target for 80 billion back in May of 2024, we were always clear, that's a risk-adjusted target. So some things in the pipeline will work and some things won't work. And we had a very broad and deep pipeline. So this year alone, for example, we have 20, potentially phase 3 readings out. This was one of them. We've also had 6 very strong positive readouts, including 3 for new molecular entities. So those are new drugs that have never been
go up 10% every time you have one of those, did they?
Yeah, exactly. That's my point.
Yeah.
And one of them was really exciting, which was tozorakimab, which is sort of the first of its kind, and more data will come out at ERS. But when you look at all the studies that have read out over the last 2 years, we've had a 75% success rate in those studies. Industry average is probably closer to 60%. So, it's all these studies sort of, as they de-risk, they get us closer and closer to that $80 billion goal. And we're still 100% confident that we'll get there. But it is science, and that's why we run experiments, and sometimes they don't work out or they don't confirm the hypothesis of the study. But that's part of life.
Yeah, and just the final point on this as well, before Ian comes in as well, you're roughly at about $60 billion of revenue a year at the moment as well, to get to 80 billion as well. So not only do you need to get the drugs past all these trials, but you also need to obviously not have the huge patent cliffs coming off on other drugs as well, and you need 60 to 75% of these drugs to turn into some form of blockbuster going forward as well. So it's to add a third to your current revenues. It's still a hell of a target.
It definitely is, but we're very confident for a couple of reasons. One is we set this target for 20 new molecular entities. We already have 11 approved and in the market, so 9 more to go. And like I said, 3 new molecular entities, phase 3 readouts, so hopefully those will get approved. Also, there is what we call life cycle management. So these are products that are already approved, but we get new indications approved. So they don't just grow and plateau, but they keep growing. And Imfinzi is a great example of that. So it's the combination of those 2 products. The other thing is we don't have a lot of patent cliffs between now and 2030. The main drug we're losing is Farxiga, which we already lost in the US. In Europe, it's post 2028. But we think that we'll be able to cover that revenue with our new products and with the new indications.
So as you say, you've got a pretty good hit rate for phase 3 compared with the industry. So what are the highlights over the next 6 months then? You've got a whole load of phase 3 trials coming down the line.
So first I'd highlight the ones that have already read out. So just, we announced a product called synthetase alpha, which is in the rare disease space. That could be a $3 to $5 billion product. Tozorakimab, which is in the COPD space, we will announce further data at ERS. That could be a $5+ billion product, and I think people will be really surprised with the data. And then we'll also announce Soni-V, which is our Claudin 18.2 antibody drug conjugate, which should also be a new molecular entity. So that's already happened. They haven't hit the market yet because we need to register them and then get them approved and selling. And then we have a whole bunch more coming later this year, as well as next year. We have probably about 20 phase 3 studies reading out in the next 18 months. Right. And if we have the same success rate, I think we'll be pretty happy. But it's fairly diverse. Like I said, it's both new indications as well as brand new molecular entities.
I'm sorry to hark back to Wainua, but obviously you're well known for having this great strike rate at phase 3. There's been 1 or 2 murmurs around the market that it was all to do with the way that the trial was constructed.
I would not say how the trial was constructed. So to give you sort of what this drug does, so Wainua is for an indication called cardiomyopathy. And what happens is misfolded protein or amyloid gets deposited in the heart. The heart cannot pump as well, and that leads to heart failure. So patients show up as heart failure, but this is a particular variety, you could say, of heart failure. There are drugs currently approved in the market, and what they do is stabilize the protein. but they do not remove the protein that's already deposited. What we were testing is something called a silencer, which basically reduces the production of this misfolded protein. The general view in the market, and we talked to a lot of cardiologists before we designed the study, was that the two mechanisms will act sort of constructively with each other, so you will have an added benefit on top of a stabilizer. Well, it turns out there's not an added benefit. So most of the patients in this trial were actually already on stabilizers. What we could not do, because it would not be ethical, is to not put patients on a stabilizer and then just test them otherwise. So I would not say it's a design issue. I think it's how the science evolves, and adding a drug is not always lead to added benefit.
Let's go back to an issue which you're always prepared to answer, and it's one we always ask, because we have to ask as well, is what is the situation with the Trump oscillation, the Trump roller coaster? I mean, I presume you guys are saying, look, we have your research facilities in the States, we have our manufacturing in the States, we're fine, but I mean, just tell us how difficult it is to negotiate.
So we entered into the MFN agreements last year, just as most other pharma companies did. But the U.S. still continues to be our largest market. We have 6 different R&D sites. So we have 2 in the U.S., 2 in Europe, obviously the biggest one here in Cambridge, and then 2 in China. And we're driven by wherever the science is the best. And for example, in China, science is evolving really, really fast. And we've partnered with universities and so forth, same as we have done here and in Sweden. And so I think for us, the key objective is, where do we get the best science and the best partnerships? More and more, we're also starting to do partnerships with universities on AI. And using de-identified patient data to help find better targets in diseases which haven't been treated, for example. So that's really always our focus, wherever that science leads us. And there's great science in all 3 geographies.
Obviously, weight loss is huge for the industry right now. What are you saying on that today?
So we are pleased to announce we just started first enrollment in our weight loss program. So we have an oral GLP-1, which is an oral small molecule. And we announced that we would be starting 3 phase 3 studies, 1 in patients without diabetes, 1 in patients with diabetes for weight management, and 2 of them have started enrolling. So
final question, we've got to let you go. But shares are down 8% this year after the Wanhua situation that we saw quite recently as well. You're upping the divvy by 3 cents a share, I think, at the interim level as well. Increased buyback as well, I presume, or just tell us what's going on there? Because, I mean, I'd imagine a lot of AstraZeneca insiders think these shares are way undervalued and way overbanked to the downside, given that news.
So we don't really do share buybacks. Our capital allocation strategy is more focused on dividends and reinvesting in the business. Yeah. This year, for example, we've done about $3.6 billion worth of BD transactions. And when I mentioned, where we've done different licensing deals and so forth. But yes, I believe shares are significantly undervalued, and we announced 1 positive phase 3 study today, and hopefully there will be a lot more to come in the next 18 months.
Thank you.
Very good. Uradana, good to see you this morning.
Thank you so much.
That's Uradana Sarin, CFO of AstraZeneca. Well, coming up on the show, CXMT becomes the largest listed company in China by total market cap after a blockbuster market debut. Plus, hundreds of thousands of people evacuate their homes as wildfires rage across France and Spain, with President Emmanuel Macron calling a crisis meeting. And we'll get a pulse check on the German economy when we speak with IFO President Clemens Fürst. That interview coming up at 9:15 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. French President Emmanuel Macron is to hold a crisis meeting today as wildfires spread across the country ahead of another heatwave this week. More than 330,000 people have been evacuated in France and Spain, with firefighters struggling to control massive blazes. Temperatures in France are expected to top 40 degrees again this week. Well, Stefan Doer is the Professor of Wildland Fire Science and Director of the Centre for Wildlife Studies at Swansea University. Professor, very good morning to you. I'm bound to ask, I mean, these sort of events are becoming more and more frequent. Why were Southern Europeans not so prepared for this?
Well, I don't think it's fair to say that Southern Europe isn't prepared in general, because if you look at the Mediterranean countries, fires occur every year, and we have very good cooperation now across Europe in terms of firefighting. What is so unusual, really, is that we're now in the third consecutive heat wave that really dried out the landscape. And that means once you have an ignition, that can really escalate into a very severe fire. And this is what we're seeing now across parts of Europe, across parts of Western Europe, including the UK. So in that sense, the overall scale of the events now is beyond the capability of dealing with it effectively.
So does this mean governments are going to have to rethink their whole approaches to these sort of incidents in future?
Well, I wouldn't say necessarily the whole approaches, but what we are essentially doing in Europe is we improving the resources to fight the fires, whereas we're not sufficiently improving, at least in some areas, the resources to be more prepared for those in terms of mitigating the fires in the first place. It's like having really good medical facilities and treating a patient and then still be overwhelmed when things get really bad, rather than actually making sure the person doesn't get ill in the first place. And this is essentially a better land management, better preparation for fires, better communication, and also better science compared to just better firefighting resources, which, as we see now, are just too far stretched.
Yeah, Stefan, it's very interesting. And actually, the situation we're seeing in Europe, of course, is mirrored elsewhere, perhaps as we see more concerns about climate change. But the US president says, no, it's about mismanagement of woodland resources when the fires happen in the United States, when they happen in Canada, and the effects drift through into the US as well. Is it about management, or is it about climate change? Or obviously, I'd guess it's a bit of both.
It, of course, is a bit of both. And this is something very common that President Trump has said in his previous presidency after the very damaging campfires at the time in the US, at the time the most expensive fire disasters in the US. But now we've had Los Angeles, of course, which has been much more expensive. But I'm digressing slightly. So we basically need better management, absolutely, but climate change plays a major role in this. And better management certainly means that we should manage the landscape better for not propagating fire through it. And so what we've seen in Europe, for example, is land abandonment in many areas, especially in the Mediterranean, for example, around the area of Madrid, less so around Bordeaux. And that means that we have less agricultural activity, and we have proliferation of grasses, of shrubs, and also we have more trees in the landscape, a lot more trees than we used to have in parts of the Mediterranean and also in the area around Bordeaux. And that simply means if we have these extreme weather conditions, these extreme droughts, if there is an ignition, it just becomes much more difficult to fight. So yes, land management does play a role, but it's not the only role.
Stefan, you've intrigued me, because we're talking about less agricultural land and more woodlands, more grasslands, more perhaps returning to a more natural ecological state. But if we do that, then what you're saying is we are going to get more fires unless we manage that more natural ecological state, which will then make it less natural.
Yes, you could argue this. It's certainly, I would say, we have less vegetation in the landscape. Whether that's less natural is another question, because Europe has basically been under agriculture for thousands of years. So the landscape we see now at the moment is nothing to do with a natural state without humans. If we had a natural landscape, we would have actually in some places at least far less flammable forests. A lot of the forests that have been established are dense forest plantations of conifers, we wouldn't have had those dense conifer forests in the long distant past. We also have a similar situation in the UK. We have hardly any forests left. The ones that are being planted are often conifers, and the heathland vegetation we have across the UK that's causing some of the main problems at the moment. This is man-made. It's not that the plants are not natural, but the way the landscape looks now is entirely artificial.
What are the sort of trees that we should be planting then, if not these?
Deciduous trees, for example. Oak trees, for example, are more resilient to fire than conifers, and this is one of the key issues in the Mediterranean, because pine trees grow quite fast. They are well adapted to the climate, but if you have dense forest stands, they can be extremely flammable, and once they're on fire, they're extremely difficult to put out. So it's both the species as well as how densely they are being planted or they establish themselves.